Welcome back. Hope you're having a fabulous morning. It's going to be a fantastic Friday, hopefully. And we'll be getting you all the stock market updates. For the time being, let's get straight to our first corporate on the show. We have PG Electroplast. That's a stock on our radar. For Q3, they give a very strong growth on the top line. Margins as well, came a little bit lower actually on a year-on-year basis. Mr. Vikas Gupta, the MD operations at PG Electroplast, joins us on the show. Hi, Vikas. Good morning and always good to see you. Well, you're walking the talk, with regard to the numbers. And you're guiding for a very good showing in Q4 as well. So that's pretty good. But, I just want to ask you for FY25, what can an outlook will we look at? You're going to be doing roughly around 2,800 crores of revenues with margins in that 7.5%. What's the outlook?
Yeah, good morning, Nigel. And it's always a pleasure talking to you guys. For FY25, we are still not worked out the numbers, but definitely we will be looking at industry-leading growth in all our product categories, like air conditioners, washing machines, and television business. So we are hoping for a good growth in the FY25 also. We have not still worked out the exact numbers. We'll be coming out with the guidance for FY25 maybe in a couple of months' time.
Got it. All right. So FY24 is looking good. FY25, we'll have to fix a date with you for that as well. Now, my query is on the TV business. I recall when we spoke last, I think this year you'll end with around 250-300 crores of revenues from the TV business. And next year you'll scale up big time. It could be 500 to 600 crores. I'm getting those numbers correct, I hope. Right?
So our target internally for television business for FY25 is almost around 500 crores, I would say.
Got it. All right. My query to you is, I'm looking at a note coming in from Incred, and they're saying good to see good growth on the top line, for the TV business. But they believe that it's going to be margin dilutive. And they've put out a few numbers. They're expecting margins to get diluted by around 130 basis points in the coming year. And in the next year by another 140 basis points. What do you have to say about this? Do you believe that margins will get diluted as TV scales up? And if yes, what could be the new range we should look at?
So please understand, when we talk about the television business or we talk about the other product category business, we cannot compare those businesses because those businesses have a very different margin profile. But if we look at the electronics business, then we need to see how the ROC and ROE will perform in that parameters. So that way, that business looks very promising. But nonetheless, on the whole, we are confident that we will be growing on our margin profile also in FY25 because we have the AC business and the washing business will be contributing a lot in that margin for
overall.
FY25.
Vikas, hi, good morning. Prashant here. I mean, world over, and this is true over the last 20-25 years, prices of consumer electronics, they go down, they don't go up, right? I mean, that's the general rule across product categories, and I think you'd agree with that. But just for this particular quarter, I think margins overall, not TV, but overall margins have come off a little bit. Is that, could you talk to us about, is that a change in mix or what caused it?
So please understand, definitely the electronics business has played a role in that. And as the electronic business has grown, so the margin has dipped a little in the Q3. But if you look at overall, the guidance that we gave, we are doing better than the guidance that we gave initially.
So margins should, again, you said that you're working out numbers for FY25. But is it possible to sort of run us through what should be steady state margins? I mean, what broadly in the ballpark would be 7%, over 7%, under it?
So I think in FY25, we should be in the range of between 7.5% to 8% again.
7.5% to 8% will be the FY24 EBITDA margin. Just quickly on this Q4 guidance that you've given, a 1,075 crore on the top line. It compares with a revenue of 530 crore in Q3, so doubling on the revenue. And even on margins, EBITDA of 100 crore, which compares with Q3 EBITDA of 47 crore. While it's in line with your overall FY24 guidance, can you break it up, this Q4 guidance in the specific categories that you operate in?
So please understand, Reema, for us, the Q4 and Q1 are always a good quarters because that business, the AC is a like the Q4 is always good for the AC business. So we have a strong order book, And we are already almost in the middle of the quarter 4, and the kind of run rate that we are running, we are confident that we should be able to achieve the number of 1075 crores in the terms of revenue and 100 crores in EBITDA for FY24.
Okay,
Quarter 4 of FY24.
Got it. So you're sticking to the guidance of quarter 4. You'll get back to us with regard to FY25. And for FY25, more importantly, the margin that you have given us is 7.5% to 8%. You believe that will hold because of the evolving mix as well, despite TV growing. So we take that point. What about the IT products business? That as well is expected to grow, right? What kind of revenues will you be doing from there?
So for IT, like we applied for a IT hardware PLI that is in our JV company, which is Goodworth Electronics with Jana Group. And we are already in discussions with certain clients. As soon as we are able to mature those discussions, we will be sharing those details and giving the revenue guidance as well on that.
Right. Vikas, would this be sort of this same as what you call component infrastructure, or this is separate? The IT products.
IT hardware, IT
is laptops,
hardware
etc.
covers the laptops, laptops, computers, and servers.
No, because there's another sort of component. So there is now BI certification required, right, for many things. And that is, I mean, of course, Chinese products can't have it, so imports there perhaps will get restricted. Is that an opportunity as well? And what kind of products are we looking at there when we talk about component infrastructure?
So please understand, like the main focus of the government is to deepen the component ecosystem in India, and that's why there are a lot of quality control orders coming out, where the government is trying to push the development of the local manufacturing base for the components. So definitely we will keep on evaluating that field also for the component manufacturing. But for us, our focus going forward.
Okay, I think we are losing that line. Vikas, are you there?
And IT hardly for the which the servers.
Yeah. Okay.
Yeah.
Yeah.
Are you able to hear
we
me?
lost you there. Yeah. We lost you there for just a bit, but we got it. We got the answer. Sorry, what kind of components are these? Just to, you said you may look at it, but what are we talking about specifically?
Like if we look at the components, it can be like in our white goods PLI, we have motors, then compressors, and in the electronic components, there are like PCBs and all those things. So we will be evaluating those opportunities going forward.
All right, we'll leave it there, Vikas. Thank you very much. Good speaking with you and good luck. Appreciate you joining in here on CNBC TV18. I think that's the first corporate with sort of a quick comment on the earnings which are coming through